In the grand chessboard of the energy transition, there is one piece that has suddenly become the most powerful on the board. For years, it was ignored, criticized, and even feared. But today, in a world desperate for massive amounts of carbon-free electricity to power the artificial intelligence revolution, this energy source is the only one that can deliver at scale, 24 hours a day, 7 days a week. That energy is nuclear power. And the undisputed king of nuclear power in the United States is Constellation Energy. Ticker symbol CEG. Today, we are going to tell the story of how a company that was spun off just a few years ago has transformed into the most critical infrastructure partner for big tech. We have analyzed their financial journey from the foundational 10K reports of 2022 and 2023 to the breakout performance revealed in the earnings presentations of 2025. This is not just a utility story. It is a technology story, a policy story, and perhaps the most important investment thesis of this decade. To understand the magnitude of Constellation Energy's position in late 2025, we must first look back at the landscape just a few years ago. In 2022, when Constellation separated from Exelon, the market viewed it as a collection of aging assets. Nuclear plants were seen as liabilities, expensive to run and difficult to maintain. But the management saw something else. They saw the nuclear production tax credit in the Inflation Reduction Act as a floor for their earnings, a safety net that de-risked their entire portfolio. The 2022 and 2023 annual reports are filled with details about this policy support. It was a game changer. It effectively guaranteed a minimum price for their power, turning volatility into stability, but that was just the defense. The offense, the growth strategy, was yet to come. Fast forward to the earnings calls of 2025, and the world has changed. The rise of generative AI has created an insatiable hunger for electricity. Data centers are popping up everywhere, and they don't just need power when the sun shines or the wind blows. They need baseload power that never flickers. This is where Constellation's fleet of nuclear reactors becomes a gold mine. In the Q1 and Q2 2025 presentations, we see the company pivoting aggressively to meet this demand. They are not just selling power to the grid. They are signing long-term, behind-the-meter contracts with tech giants. The most famous example, hinted at in earlier reports and solidified in 2025, is the deal to restart the 3 Mile Island Unit 1 reactor, now renamed the Crane Clean Energy Center, to power Microsoft's data centers. This deal proved two things. First, that big tech is willing to pay a premium for nuclear reliability. And second, that retired nuclear assets can be brought back to life to serve the digital economy. Let us dive into the financials of 2025. The Q3 2025 earnings presentation paints a picture of a company firing on all cylinders. They are raising guidance, expanding margins, and generating massive free cash flow. The base earnings are growing at a double-digit pace, far outstripping the typical utility growth rate of 5 or 6%. Why? Because Constellation is not a regulated utility. It is an unregulated power producer. This means that as power prices rise due to scarcity and high demand, Constellation captures that upside immediately. They are not capped by a public utility commission. The 2025 reports show that their commercial team is realizing higher prices for their energy, driven by the tight supply-demand balance in markets like PJM, which covers the Mid-Atlantic region where many data centers are located. But the story isn't just about selling electrons. It's about financial discipline. Throughout the 2023 and 2024 annual reports, there was a strong focus on maintaining an investment-grade credit rating and returning capital to shareholders. In 2025, they delivered on those promises. They have executed billions of dollars in share buybacks, effectively shrinking the share count and boosting earnings per share even further. They have also increased their dividend, making the stock attractive to income investors as well as growth seekers. The balance sheet is pristine, with manageable debt levels that allow them to invest in growth projects like uprating existing reactors to squeeze out more power and extending the licenses of their fleet to run for 80 years. We must also talk about the Calpine acquisition mentioned in the 2025 documents. This is a strategic masterstroke. By acquiring Calpine, Constellation is adding a massive fleet of natural gas plants to its portfolio. At first glance, this might seem counterintuitive for a clean energy company, but in reality, it is pragmatic. As renewable energy grows, the grid needs flexible backup power to handle the intermittency. Natural gas provides that flexibility. By combining nuclear baseload with gas peaking capacity, Constellation offers a complete solution to the grid. They can keep the lights on 100% of the time, regardless of the weather. This acquisition also expands their footprint into key markets like Texas and California, further diversifying their revenue streams. Of course, there are risks. Operating nuclear plants is complex and heavily regulated. One safety incident could change the narrative overnight. The 2025 filings also discuss the challenges of supply chains for nuclear fuel and the need to secure domestic uranium enrichment capabilities. However, Constellation has the scale and expertise to manage these risks better than anyone else. They run the best-performing nuclear fleet in the world, with capacity factors consistently above 94%. This operational excellence is their moat. You cannot simply build a new nuclear fleet overnight. It takes a decade. Constellation owns the assets that exist today, right when the demand is spiking. So, what is the conclusion for the long-term investor looking at Constellation Energy in late 2025? We are witnessing a nuclear renaissance, and Constellation is its undisputed leader. The thesis has shifted from value to growth. They are no longer just a cheap way to buy power generation. They are a premium infrastructure play for the AI age. The convergence of government policy support, big tech demand, and grid reliability needs has created a perfect storm for this company. The bust era of cheap, unwanted nuclear power is over. The boom era of nuclear as a strategic asset has begun. As we look toward 2026 and beyond, Constellation Energy stands not just as a power company, but as the engine room of the American economy, providing the clean, reliable fuel that will drive the next generation of technological innovation.